Hi everyone, welcome to our latest video. It's Alex here, CEO at Cestrian Capital Research. I'm delighted to be talking to Gaines, who runs the Trading Gains pay channel that sits on our Cestrian Stock Symposium platform. Gaines has been working with us for a couple of months now off the back of a very successful channel elsewhere. And I'm going to talk to him today about how he got into trading and investing, some of his methods, some recent successes, failures, and the background as to why he runs a channel at all and what his users get out of it. So first of all, welcome Gaines. Thanks very much for spending your time with us. And again, great job growing and running that pay channel with us. Excellent work.
Yeah, thanks, Alex. I appreciate the invite today.
Not at all. So, hey, maybe we could start. If you tell us, a little bit about how you got into investing and trading, how you go about it, and then we can go on to, why you run this channel and what's the motivation there. But maybe start with how you got into the whole game.
Sure. Yeah, so I got in the whole thing. I have a undergrad and master's in finance, and I really just love numbers. I guess it's kind of weird to say, kind of a nerdy thing, but the reality is I just kind of gravitated towards markets and all the flashing lights with the numbers and all the charts and making sense out of the nonsense. It was really just attractive to see how people could make money and really teach themselves how to make money without really needing much help. Some people needed help, some people didn't, but really to kind of get in that space where I really wanted to do this for a living. And eventually after studying up and having some trial and error, I kind of settled on technical analysis as a style, in addition to some fundamental analysis. But I've been doing it for about 15 years now, and what I really like about it is it's repeatable, and it's a pretty, I guess it's a pretty easy thing to get into, and it's really hard to get out of. And hopefully that makes sense.
It does make sense.
Yeah, it's really more of like once you understand how markets work and how there's relationships between, let's say, indexes and bond rates, things like that, you can really start to end up making money. And again, there's no promises. You have to go through some hard times first, but that's really like paying tuition to the market. But once you've got a good solid footing under you, then you can really do well if you're just focused and you take the time to learn things. So ultimately,
I agree with that. How did you learn to begin with? Because as you say, normally when you start, you have to put the hard yards in, you have to make some mistakes, you have to lose some money in order to get good at it. And hopefully that money losing period isn't for too long, and then you get a method that works for you, and as you say, that becomes repeatable. In good markets and bad markets and sideways markets, it becomes repeatable. So how did you learn? What did you do?
Well, Alex, the one thing you'll get out of me is honesty. That's for sure. The money losing part of the learning process was a lot longer than I would have liked.
Yeah,
But
well,
it was
that's true. That's true for anyone who's honest, right? I mean, anyone that tells you that they were successful at the gate or after 3 months, that's just not true ever,
it's
right?
lies.
Lies, right?
It's all lies. Yeah. So realistically, I would say probably the first year, what I ended up doing was just trading normal stocks. Trying to look at charts and interpret, what looks like a good low point. And at that point, when you're first starting, you really don't know what you're looking at. You're just looking at a chart and saying, oh, it looks low, I'm going to buy here.
Yeah, that's
Or
right.
you're like, oh, it looks high, I'm going to sell here.
Yeah.
And you really don't have much more knowledge than somebody just walking into the hardware store for the first time trying to fix a toilet. I don't know why I use that
Exactly
analogy,
right.
but
Exactly right.
but I guess the early strategy was like, how can we make money with just clicking a mouse? And really just starting out with just regular stocks, no leverage, none of that. And what really started to, I guess, have I started to get more interested in things like options, and that's when you started to get into trouble, because if you don't know a lot about something like that, there's many different factors that can impact your profitability, or really set you up for some pretty serious losses.
That's right.
And I guess how I originally learned was just trial and error, honestly. And again, I've been doing this for about 15 plus years now, and the first year was probably the hardest because you might have had to, like, I had a couple of successes early on that keeps you motivated to keep going, but then you start to realize that you have your own style. Certain indicators that you like, certain assets that you like to trade. Let's say you only like to trade tech stocks, or you like to trade grandpa stocks, that kind of thing.
Yeah.
So just overall, that's pretty much how I got started and getting some traction.
That's great. So tell us a little bit about the method that you use, and this is something that you use both for your own, personal trading, and also it's what you use in the Trading Gains service. So why don't you talk through how you, reach a trading decision, the framework of analysis that you use, all of that. That would be really helpful.
Sure. So the entire process, I try to keep it as simple as possible. One of the things I really like to do is I like to teach people, especially teach them how to fish. And it's also a reason why the biggest reason why I wanted to start the service is because I really want to help people make their own money and understand how it works and really set them up for financial success, and their families as well. It's important to me. So tying that all back.
That's a really good point. It's really rewarding when someone comes back to you and says, I use some of your work in my own analysis, and I did great with that, and that's helped me be successful here and here and here, and it's paid for this and this, and that is really rewarding. I agree.
It's incredibly rewarding. One specific example I had, a couple of years ago, I had somebody message me, do a direct message and say, because of your charts, I was able to take my minivan and turn it into a BMW.
Yeah.
And I thought it was great. I'm like, hey, well, at least you don't have to drive a minivan around anymore.
That's good.
But so to answer your question about the methodology, what I've sort of settled on over the last, I'd say, your methodology changes as you evolve as a trader or just an investor, speculator, however you want to approach it. But it's really simple. It's based on volume. The majority of it's really based on volume, because volume is really, everything that's all the orders that have been executed. So there's no concern about dark pool funds. There's no, super weird, named stuff. Like, you don't have to consider any of that, because volume is really what gives you that 100%, executed order, sort of mark. So you can really, figure out like what are good support levels, what are good, resistance levels for, just as the price action matures throughout, the days, weeks, months. And another feature, I guess, as well as the system here is I use, Fibonacci levels or, Fibonacci retracement levels, and what those are typically, levels that you would typically see bounces. So let's say we're, let's say a 50%, retrace of a big sell-off. That's, that would be considered, something that you can, you can set a buy order for or sell order, a level that you think is, a higher probability of being hit. Now, combining that all, with the final piece, which is really, Elliott wave analysis. But there's also a little bit of secret sauce. Not gonna lie, you can stare at charts all day, which I do. My wife is not happy, but I do. But aren't we all, right? Everybody who's seriously considering a service or something like this has a big interest, right? Yeah, and you have to commit to it if you want to be successful.
You do.
And that's what I try to tell people, is that if you want to do this, you can't just sit on your couch and trade away the day and become a millionaire. That's a great way to lose a bunch of money.
That's a great way to help other people become millionaires. Right?
Exactly. Yeah, that's a great way to.
That is the
direct deposit.
Yeah, exactly. That's the perfect trader model that all of Wall Street wants you to adopt, which is to sit there,
That's right.
flip coins, and hope that this is right, and hope that option works out, and hope you pay the right price. That is the quarry of Wall Street, right? And what you're saying is, look, if you put the time in, if you put the work in, if you put the thought in, you can develop, your own method. Sure, take inspiration from other people, follow other people's trades for a while, but actually the real value here is in learning a method of your own that you can turn into a sustainable, long-term way of trading and investing.
Yeah, absolutely. And I'll still continue to focus on less is more. I mean, to be honest, I've had this conversation with many people. People ask me, like, why don't you use this indicator, or why don't you use that? And the answer is because I don't need it. And a lot of people don't know how to process that answer. And what I'll respond to them and say is that I can look at a chart and look at what the volume is, or let's say use something like a strength indicator like RSI. Like I can tell you like what the momentum would potentially do to a like a price forecast. For example, we're going through the crazy euphoric bull market right now, and we might see a blow off top. And I think part of that is just like when you watch these indexes all throughout the day, some of them they do have an actual feel to it when you're looking at the price action
Yeah, I
throughout
agree.
the day. And what a big portion of what the service focuses on is just taking some of that experience and also posting charts, let's say in the main channel, and just add a little bit of a description as to why I think something is going to do a certain thing, like it's going to go up because of this.
Yeah.
And sometimes when you pay for trading services, they just give you trade alerts and that's it. And you don't really have to really think for yourself. And I guess yes, there are trading alerts and things like, hey, we're going to buy this piece here, or this fund here and why. But really tying it all back to teaching people how to fish with with markets and teaching them how.
One of the things I really like about your service is, you have very specific that I'm buying this now and I'm selling that now. And, that's really clear alerts, but all through the day, every trading day, you've got commentary on what's going on, why you think that might be. And you always take the time to teach some method as well. And it's all done in a pretty light-hearted style, which I really like. And it's one of the things I think that's made the channel such a success so quickly. So I think it's a really great style. I really like it.
Some people would say I got to work on my jokes, Alex. I think that's true.
Trading jokes aren't that funny. It's hard work. Right?
You got to sprinkle a little bit of spice in it.
You do.
I feel like my personality is a little bit more. I guess I could say I'm a kind of a loud person, I guess. But trading is like, don't forget to have fun with it, guys. And like this is part of the thing that people really miss out on, is they get so focused on making money, or focused on when they should cut their losses, that they forget to have fun with it. So the community itself, like that's another piece why I really wanted to start a service, is because people who like-minded individuals that come together, like it's a great community. And I don't know everything that's going on. Like there's no way you could possibly digest all that information and apply it. So, it really takes a village a village of like-minded people to kind of band together and, like, let's all make money together. Like it's not a, self-directed sort of thing, or, I tell you this and you go do this. I mean, we can't do that. Of course, it's not advice. It's more of, here's a good setup. This might be a good place to, go along, should you choose to participate. And this is really, it's my own money as the fund. And, you can have good days, you can have bad days, but I guess explaining why, and also focusing on risk management, I think is a big piece of what I think what people are going to get a lot of value out of through the service. So not just learning like how wave retracements and all sorts of the terminology is endless, right? But we try to keep it simple, where somebody who isn't very, very savvy with market terminology, you should be able to pick stuff up pretty quickly. We also have like a getting started document too, where it goes through like the methodology, some of the indicators I use. Like for example, I have a custom indicator that I use for indexes that correlate with each other. So again, trying to keep it simple, and we'll show you in a minute here. Hopefully.
That'd be great. The other thing I really like is, you've got a great community there, and it's a group of people that are all, trying to succeed together. And I've seen that as people have joined the channel, everyone's really welcoming. It's not one of those stock shaming services, or where everyone's trying to outdo each other for who's the brightest, cleverest, sharpest one in the room. And I've seen as new people join and ask questions, 3 or 4 people will pile in and help them out, which is great. I always hate these services where it's, this guru thing where there's some genius, sat in the center office and everything's routed that way. And if, the genius happens to be wrong, there's a lot of waving jazz hands about why they weren't wrong. And, if the genius is having a bad day, then no one's questions get answered. I much prefer what you've built, which is there's a group of really smart folks who will, pile in and help each other, and in particular help new people who are trying to find the way around. So it's really terrific.
And one last thing I'll say about that, I appreciate that. Thank you. One of the things I'll say is that it's a service for serious people, serious investors, speculators, whatever you want to do, it's a service for that. But you have to try, and you have to, like, again, you said there's no stock shaming, right? Like that's not allowed. Somebody who takes a position on something because they think X, Y, Z, well, they at least have a justification for it. And if they end up, on the wrong side of the trade, well, it might just be a matter of a couple of days before they swing to profitability, and they're the ones laughing all the way to the bank.
Yeah, exactly.
So it's really just trying to teach people that there's more than there's a million ways to make money in the stock market. And like, I'm not saying that my method's the best or it's the worst or whatever. It doesn't really matter. It's still it's a methodology, and it's a simple methodology, which is why I hope it's going to appeal to people, where they can get their questions answered, they can participate, they get the justifications as to why things are going to happen, or why we're going to do things like buy or sell a certain security. But the last thing I'll say about it is I'm really happy that people are taking a liking to it. So just the service in general, and they're starting to participate, and I'm getting better questions from people who have joined only a couple weeks ago, and that just tells me that people are pun intended, investing in themselves.
That's right.
With some of this knowledge. Yeah.
That's exactly right. So hey, why don't you do two things for everyone that's watching right here? Why don't you just tell us a little bit more about the special sauce, the method, just spend a couple of minutes on that, and then take us through maybe a couple of winners recently, and maybe a loser, and how you handled the loser. And folks, if you're watching this, if you look at the comments field below this video, you can see the sign up link for Trading Gains Services. So you can click on that and join up. But Gaines, why don't you just talk to us about those, a bit on method, and then a couple of winners and a loser, and how you handled it.
Sure. Yeah. So this is going to be just slightly down the technical hole here, but please stop me if I'm nerding out too bad here. All right. So just using the NASDAQ here as and this is the futures ticker for the NASDAQ, just to give you a real high level view of what we typically we'll see in like a daily chart. So what we're looking at here is the last the last couple of weeks of price action here for NASDAQ or NQ, and we can see that there's it looks like the chart pattern's an ending diagonal, at least for now, until we have to adapt. But that's it's another thing about the methodology, is that if this doesn't materialize, or this pattern, we have to be nimble enough to make these trades in order to manage the risk. So right. Really what we're looking at is, let's say today, right, this is what the chart was looking like. In concept here, markets move in waves, 5 waves and 3 waves. 5 waves are impulsive, 3 waves are corrective. And if we look at, let's say, a very, very high level view of the NASDAQ here. I do have this labeled here. You can see here that there's 5 waves labeled. So let's say like wave 3 is typically the strongest. There's a lot of these little nuances that you'll pick up eventually, but things that I've been able to apply throughout the entire trading career here really have been developed over time. So once you kind of realize, and you see the proof in the price action and where things bounce, it really gives a lot of credibility to the Elliott wave system. Not saying it's perfect; it can be subjective, but more often than not, it's still a very good tool to use. So yeah. Overall, what I guess I would say is the most important thing to grasp is we do some wave counts to see kind of where we're at with the markets today. So overall, it looks like we're at the very end of a wave 5 here, but as with anything, waves can extend. So that's where you need to apply the knowledge and say, okay, well, how do I measure that? So once you measure that, is that going to be right? And if that doesn't work out, then what's the next step? So assuming that again, we're in this wave 5 of 5 at the end here, if we zoom in, and again, this is at the daily level. If we zoom in, typically, if we see something like this at the end of a wave 5, we might see, like if you draw this, you might see 5 points of contact within the same structure. So we might see something like this, where we make a we're making a new high here, but not right away. And you can still profit from something like this, where if the Nasdaq goes down 500 points, like that's huge. I mean, if you're short in the market, it could be a couple $1,000s if you have the short position. But there's still a catch, and I will go over that in a second with the trade logs. It's not super easy, but in concept here, once you understand how to draw structures and waves like that, you can see that like we might be expecting a down move soon, and then ultimately a new high, but we have to use other tools as well. So one thing, I guess I'd say the second thing that's super important here is this is a wave retracement drawing here, where you can see, or an extension, sorry, this is a Elliott wave extension drawing. So what we're doing is we're just measuring the distance from peak to trough from the preceding wave, and then whatever the dip is, and then measuring that out. And typically there are rules where, let's say, the extension of this entire leg here, it didn't stop at, let's say, A equals C or at 100. So typically you would see it extend out to 1.236. I don't want to get too technical on this, but like little nuances where if the price stops right on it, on the button, there you go. So our top target one was hit within a couple ticks. And that's important because if it does get hit like that, you can sense that there's going to be a rejection. And we did see a decent rejection. Now we saw a retrace today after after the bell with like, let's say Netflix earnings. But overall, why it's important, and I'll wrap you here in a second, is just that using wave analysis, we can see that there's a certain projection that we can assume, and after we make the assumption, then we need to back it up with some more data. So on the bottom
Yeah.
here,
So for me, when I started life as a trained fundamentalist, and that's great, and it's a necessary part of the job, particularly for long-term investing. But when I learned to do technical analysis, it was like 14 light bulbs went on, and the reason for that is because technical analysis, when carried out correctly, as it isn't just drawing any old lines on a chart. It's learning to speak a language, and the market speaks that language. Large account players who move markets with a sheer volume of money speak this language, and you can learn different takes on these patterns. You could use different lenses, but when you find a system that works for you, you find that you can measure the ebbs and flows of the markets. You can measure a move up and a move down. And so it's not just like you say, I find a chart, this looks like a low, this looks like a high, I'll guess. You can still be wrong, one will often be wrong, but these are measurements. This isn't just a wild guess. And that for me was as I say, a series of light bulbs going off, going, okay, now I get it. I have to learn to speak the language. When I'm watching a chart, what I'm really doing is I'm in a room full of people and I'm trying to tune into this conversation and figure out what's the flow of this conversation, where can I jump in, where can I jump out? And that's what your system's doing here.
Yeah, it's a great way to put it. And I think what else is important to add too is that when you put volume into that conversation, it's like, how loud is the volume in the room?
Exactly. Who's shouting the loudest? Exactly.
Right. So it's the buyers or the sellers, and clearly we can see with this massive rally, it's definitely the buyers. Yeah. But being able to read those tea leaves takes some time to practice, and this is still a bird's eye view. But overall, like technical analysis works, and there are some people that'll say, it's voodoo, that you're just drawing lines on a chart. Well, what I always say to people is keep it simple, right? Like,
that's right.
90+% of all the shares traded on the equity markets are traded by algorithms, and algorithms have to be programmed by people, and people have to punch numbers in. So exactly. where price is likely to retrace or where they're likely to bounce at, those are all programs, and they're programs by people who trade. So once you can understand that, robots don't care if, it's they don't get scared. They don't panic sell. They don't panic buy. There's always a strategy behind it. Yep. If you have billions of dollars to deploy, there's always a strategy. So figuring out how to understand that strategy behind the scenes, that's why I think that, like using volume and strength indicators and, correlations, that sort of thing, that's super important. And Alex, if you don't mind, I'll just show like the last major key as to what I feel like is sort of the secret sauce here with this service.
Great.
All right, so again, try not to beat this to death, but this chart here, there's a lot of lines. Okay, this is not a chart crime. Hopefully, once I explain this, hopefully this helps. So what you're looking at here, so okay, if you're ever familiar with the term, all boats rise and fall with the tide, well, that's true in markets as well. So if markets move in waves, then why can't we analyze what the let's say the covariance is between certain things? So for example, this chart here in the orange shows the 10-year yield in orange. Now the 10-year yield is, I think it's one of those things that drives the markets. Now it has an inverse relationship to equities. So for example, if you were to change it, then this is what you'll see on your chart, and then it wouldn't really make sense. But if you invert it, you'll see that it all tracks together in tandem. Now sometimes you can see flip-flops like at tops, things like that. But for the most part, if you look at this, you'll see other things as well. Like the teal line is the U.S. dollar. The gold one is gold. VIX is in red, and you'll see some of the equity indexes like the S&P or Nasdaq, purple and blue. But they all do rise together or fall together. And if let's say you do this on the hourly level, you can see with this is not like a precise sort of thing. Okay, it's directional. So for example, if we're going to make some trades and say we're going to go long here, I want to see some confirmation from some of the other indexes. There definitely have been times here where there's been some arbitrage where you can see, let's say for example, the dollar and the 10-year are moving in tandem, but let's say the Dow hasn't quite gone as far as you've measured out and think it's going to go. So that might actually be a really good long opportunity because it might just be only a half hour behind. And I've seen that happen probably twice a week, where you can take advantage of something like that.
Yeah.
But so I guess overall, to kind of sum up the whole thing, there's another piece here where there's correlation. So if there is a very strong correlation between equities, let's say Nasdaq and Nasdaq and the S&P, which is typically correct, you can assume that they'll both march together. But combine that with technical analysis, and you can see that as we're printing these patterns here, if you layer on things like, for example, you add on the 10-year yield, and you can just kind of show how it marches in tandem.
Yeah,
and
that's great.
Yeah. So long story short here is that it's not too complicated, even though it looks like a lot of lines. There's still a method to the madness here, and it's all about.
But what you've done here is, as you said earlier, I mean, there's literally thousands of indicators that people can choose, and you've picked a handful that work for you, that give you a short and a long-term roadmap, and then within that you can pick trade ideas, that are in line with the direction that you can see emerging with this overall chart picture of the various markets here, right? This is your touchstone. And then within that, you look at the movements of individual securities, and you call your buy ideas and you sell ideas on that basis.
That's right. I guess overall, if I could say one word as what the indicator would be, it's a bias indicator. So it's to show me overall if the markets are all going up or if they're all going down together, that sort of thing. According to the normal relationships, of course, inverse or whatever.
Got it.
But that's still the technical part of it that it's easy to teach, I guess you could say.
Yeah.
And say,
oh,
one's correlated to the other, it's going up or it's going down. So you can plan accordingly.
Makes complete sense. So let's finish off. Let's just give us a couple of recent examples. Give us a couple of winners and how they did, and then give us. Anyone here that says they don't lose money, again, they're not being honest with themselves. The key thing about losing trades is how you manage the risk. So what do you talk to us about that as well?
Sure. All right. So let's we'll start out here with how we started at the beginning of December, and we ended up getting lucky right away, where we took out a short bond rate position, and we were able to close that only a couple days later for a nice healthy 16.4% profit.
Yep.
We also did an oil trade where we had a monster profit on that one. But overall, it doesn't always work like that.
So these
I
are,
don't.
so if you look at, if someone's wondering, you use a sort of a model portfolio amount here, relatively small dollar amount. But of course, these trades are good for, um, a few $1,000s or a few $1 million worth of account. If getting into the billions, then, you're probably not going to be trading ETFs with those sorts of amounts. But, tens, hundreds, thousands, millions of dollars that will work with your system. And then if you look at the instruments you're trading here, so you're often using ETFs, you're often using leveraged ETFs to give a bit of extra power to the trades. But essentially, you're looking at equity indices, oil, some other commodities, gold, uh,
Yes.
10-year
So
bond,
I'm
and
a big fan of like less is more, where you don't want to have 500 different things that you're trading in, because then you can't
you
focus
can't concentrate.
on.
Absolutely right. Yeah,
Right.
absolutely.
You can't focus and manage that risk, appropriately. So what we like to do here is, I'd say there's about 8 to 10 sort of securities. So we'll use the futures tickers because they're continuous. So from a charting perspective, there's no gaps. There's none of that stuff to worry about. I mean, and that's also important too, because some people trade like SPY or QQQ, and they're trying to chart with their hands tied behind their back because they don't have all the price action.
Yeah, that's right.
So things could look different at different indicators, or different tickers that are related.
Yeah.
But to kind of sum it up here with what we do trade, a handful of commodities, some bond rates, normally just the 10-year yield, and then some of the different equities like like the S&P, Nasdaq, a little bit of the Dow, and not much Russell, because Russell and I, we didn't really get along, but
It's too hard.
yeah, Russell can be difficult to please.
Yeah, I agree.
But
I mean, you can make money with it, but there's many easier ways to make money
yes,
with it.
there's easier ways. That's right. That's right. And you did say something, Alex, that I thought was a good point. So I like to use 3x leveraged ETFs and mostly trade with spreads. So essentially, what you're doing is your original trade is directional. So you say, I think it's going to go up. All right, cool. You go long, and if it actually does, great. Then you can take profits at a reasonable level. But if you get into trouble, sometimes I'm sure serious traders out there, this has all happened to you at least once, where you take out a trade and immediately it goes against you. So your best thought out, well laid out plan, you've thought about it for hours, you did all the homework, and then it just doesn't work.
Yeah.
So we practice a hedging strategy where really what we're doing is we're neutralizing the underwater trade, and that's where I wanted to take it to the next part, where this one here that we have taken out, the opposing trade to TMF, so TMV, so that's going long rates. So this was closed a while back, before rates started to rise in a good way, but we didn't really know that at the time. So you make I guess you make the best decisions you can with the opportunity and the information you have at that specific time. So with, let's say, trade units at, one unit is $10,000. You can scale however way you need to with your account to figure that out. But ultimately, what we're doing here is we're practicing hedging. So I thought this was a good example. So even though we had a loser, a pretty decent loser here for 7%, smack on my head on that one. But what we ended up doing was we added to that. So we doubled our position, and when we did see a retracement or return back to where the price was before, or close to it, then we can close out at break even. And you don't have to have the price go all the way back to where you originally took out the trade. It just has to get back half, and then you're able to exit the trade and free up the capital and say, all right, well, we'll hit the reset button. We screwed that one up, so let's start again.
Yeah, that's exactly right. I mean, I think that people get themselves tied up into knots when it's going against them, and I like the 3x levered ETFs for that reason, which is people are scared of them, and many brokers will tell you how scary they are, and that's true. If you go in one direction only, if you commit too big, if you commit too much margin, all of those things. But the great thing about them is there is an equal and opposite way to play the move. And so, yeah, we've all done it, which is best laid plans, the thing goes against you. But if you can use the inverse, then you basically can suspend time while you wait to see what happens. And the other thing I really like about what you're doing here is, um, you did something, it went against you, you averaged down, and you got out on a combined basis at cost, right? So this is an egoless way to trade, which is what I really like. You're neither going, it's a loser, I'm going to pretend it doesn't exist. You took active risk management to resolve that. But once you were back to cost, you said, I'm out. It was a bad trade on day one. I did a good trade on day two, and overall I'm back to cost and I'm out. And I think that's a really disciplined way to proceed. If you talk to anyone who's traded for a long period of time, they'll tell you the most important thing is, live to fight again tomorrow. Live to fight again tomorrow. Never,
Right.
ever, ever get, let a losing position drag you down and get a hold of you. It will ruin your emotional
That's great.
balance, ruin your account balance. Don't let these things drag you around. Solve for them, get out, right? Get
That's
out at cost if you can, or at a small loss if you can't, right?
Yeah, and you said a lot of good things. I just want to touch on two of those because I feel like they're important points. I'm a big believer that don't let your bad trades own you. People are always too late to close losers or too quick to take profits.
Yep.
That's another sort of skill that takes a long time to develop. But again, having patience with these things, where sure, it sucks to lose $700, but if you wait a couple days, maybe you can get out of that position at break even or recover half of that, and it doesn't sting so bad. But you just again have to have patience. And the second thing I wanted to mention is that what's really really nice about like leveraged ETFs is that you don't really have to use them if you don't want to. If you're not comfortable with it, you can still make the same sort of trades on QQQ or something, which is just one for one, and there's no real leverage.
That's
And
right.
I guess the last point I'll make is that time. Time is your biggest enemy and your biggest ally at the same time.
That's right.
Wait, sorry, that's a pun, I think. But realistically, like if you're in options trades, you have that extra component of time, and that's kind of a problem because then you're bound by that trade, and that's when you start losing sleep. That's when you start having issues with the market's going up today. Let's I'm just going to quit. I'm going to go for a walk. That kind of thing. That's when you start to psychologically lose the game.
That's right.
Where if you're just doing ETFs, then you don't have this dimension of time to worry about. I mean, we could sit in these shares for 6 months until they become profitable, or I mean, hopefully not. But still, like you can still develop a strategy where you don't need to be up at night wondering what's going to happen tomorrow
That's
because
right.
of all the leverage associated with it.
And
If you practice,
exactly. And if you're in that situation, you can't think clearly. If you're in a panic situation because time is against you, option Greeks are against you, you can't think clearly. And the market, meaning, market bigs, count on you not being able to think clearly, right? Because as you say, a computer thinks clearly. It follows the algorithm. It has rules that it obeys, and it doesn't get stressed or panicked or excited or any of those things. It just follows the rules. And it's very difficult to do that if you are trading options in the conventional way. I mean, there are, as you know, directionless ways to do it, but for most people, regular option trading, it's hard to do that. You get yourself tied up in all kinds of knots, and as you say, end up taking yourself out of the game. Uh, uh, Using ETFs, I think, is a much easier way to
oh yeah,
trade, remain calm, think clearly, and buy
uh,
yourself time as and when needed.
it's a very middle of the road sort of
Yeah,
asset to trade. And one of the reasons I believe that is, you can hedge right away, or you can play spreads, whatever. But you still have the ability to go to sleep at night because ETFs don't really trade at night like futures do, and they don't have leverage to the point where your losses can be infinite. I mean,
that's right.
what if you practice? And this is one of the things I like to teach is you practice position sizing appropriately. So, for example, like the max I'll ever do is 3 units or $30,000 on, one direction of a trade, just because it could go terribly wrong if you don't hedge, often or early enough. There's definitely been times, I'd say probably 3 times this past year, where everybody's got it wrong. Everybody, I don't care how good you are, we got it wrong. So acknowledging that and being nimble enough to hedge, that I think is really the secret sauce. Is that
Yeah, that's right.
your losses are confined to what your upfront cost is, and if
That's
you
right.
have something like options or futures, that's a totally different story.
That's right. That's right.
So yeah, hopefully that makes sense.
No, it's a complete sense. Well, listen, we should wrap up. This has been a great session. Thanks so much again. Doing a great job running the service. The growth has been terrific. The community is really happy, and everybody helping each other, which is terrific to see. Again, folks, if you want to sign up, if you look below in the comments field to this video, you can see the sign up link. Again, the service is called Trading Gains. It's a really low cost service. You can sign up for just $98 a month or $7.98 a year. Well worth trying. And if you don't like it, if you sign up for a month, you're $98 down. It's not so bad. But I'm pretty confident that you'll find a great environment, some great teaching, some great ideas, and hopefully you'll go and take a look. So the channel is Trading Gains. Gains, thanks ever so much for your time. Really enjoy talking to you and hear about your method and the ideas, and look forward to continued success with the channel. Thank you.
Yeah, thank you, Axel. I appreciate it.
Talk to you soon.